Welcome to the Ontario Mortgage and Real Estate Insights podcast, your go-to source for the latest developments, trends, and regulatory changes in the industry. I'm your host, Steve Hamoan, here to provide you with insights sourced from reputable news outlets to help you stay informed and make well-informed decisions.
This podcast is brought to you by Real Approved Inc., a trusted mortgage brokerage dedicated to helping Canadians achieve their homeownership dreams. Visit realapproved.ca to learn more about how our experienced team can assist you with your mortgage needs. Let's dive into today's episode.
Our first topic today is the recent increase in Toronto home sales in July, which rose by 13% over June. This is according to the Toronto Regional Real Estate Board, and it's quite a significant jump, marking the largest month-over-month increase so far in 2025.
That's right, Steve. It's encouraging to see more people finding opportunities to purchase homes, especially as affordability improves. The fact that the home price index dropped by 0.2% from June to July is a sign that prices are continuing to decline, which may be providing some relief to potential buyers.
Absolutely, Janine. The home price index is down 5.4% from July 2024, and the average selling price across the Greater Toronto Area has decreased from $1.13 million last July to $1.05 million this past month. This decline in prices seems to be making home ownership more accessible.
Yes, and as Alekia Berry-Sproul, the Toronto Regional Real Estate Board president, mentioned, this improved affordability is translating into increased home sales. However, she did note that more relief is needed, particularly when it comes to borrowing costs.
And that's a crucial point, Janine. The Bank of Canada recently held its policy interest rate at 2.75% for the third consecutive time, which isn't providing much relief for homeowners facing mortgage rate renewals. Yet, the Real Estate Board's Chief Information Officer Jason Mercer pointed out that interest rate cuts could spur even more home sales and boost the economy.
It's a delicate balance, isn't it, Steve? While lower interest rates could stimulate the market further, they also have to be managed carefully to ensure long-term economic stability. Meanwhile, in Metro Vancouver, home sales fell by 2% in July compared to last year, showing that different regions are experiencing varied trends.
That's a great observation, Janine. With about 17,000 homes on the market in Metro Vancouver, buyers there have plenty of options, as noted by Andrew Liss, the Greater Vancouver Realtors Director of Economics and Data Analytics. It's interesting to see how market dynamics differ across regions. Let's turn our attention to the condo market in the Toronto area. The average condo price has fallen to $651,000, marking the lowest level in more than 4 years. This is quite significant given the context of the larger real estate market.
Steve, this drop in condo prices could be seen as a double-edged sword. On one hand, it makes condos more accessible for first-time buyers who were previously priced out. But on the other hand, it reflects a market where supply is outpacing demand, especially in the condo segment.
That's a valid point, Janine. The Toronto Regional Real Estate Board reported a 9.3% decline in condo prices year over year. While this might be a relief for buyers, it raises questions about market stability and the future of condo investments.
Indeed, Steve. Jason Mercer from the Toronto Regional Real Estate Board noted that the condo market has seen a real growth in inventory. This is primarily because many investors have pulled back due to their inability to cover mortgage costs, which is leading to an oversupply of smaller units.
And let's not forget the impact of interest rates. With rates having been lower over the past year, there's been some improvement in affordability. However, the demand has shifted towards larger units, leaving studio and one-bedroom condos less attractive.
That's right, Steve. Many first-time buyers are looking for more space, especially after experiencing the pandemic. The desire for larger living areas has become a priority, which is influencing the types of properties that are in demand.
It's also worth noting that while prices are dropping, sales have increased across all property types year over year. Semi-detached homes, for example, saw a surge of 25.5% in sales. So while prices are lower, the activity in the market is picking up.
Yes, and with the total number of listings up by 26% year over year, buyers have more options to negotiate. But, as Jason Mercer mentioned, for prices to stabilize or rise, sales growth needs to outstrip new listings consistently over several months.
Exactly, Janine. The dynamics are complex, and while more affordable borrowing costs are helping some buyers, the market still needs to see a balance between supply and demand to create upward pressure on pricing. It will be interesting to see how the Bank of Canada's interest rate decisions in the coming months affect this balance.
Absolutely. The current landscape is providing opportunities for some while remaining challenging for others. It's a time of transition, and we'll continue to monitor these changes closely to provide our listeners with the latest insights.
Our final topic for today revolves around Canadian provincial bonds, which have been holding steady as the country's growth outlook shows signs of improvement. According to a recent review from the Bank of Montreal, Canadian economic data is holding up quite well, despite some short-term losses when government bond yields rose.
That's interesting, Steve. It's always encouraging to see stability in the bond market, especially when it's paired with a gradually improving economy. The demand for provincial debt has remained high, which seems to be a sign of investor confidence. Even though market returns lagged in July, bond spreads are at multi-year lows, which is quite promising.
Absolutely, Janine. Long-dated provincial bonds have managed to outperform over the past 6 and 12 months. It's important to note that the Bank of Canada opted to keep rates steady last month as core inflation stayed sticky. This decision might not provide immediate relief, but there's potential for modest easing in the future if more slack appears in the economy.
And with the GDP set to grow by 1.3% in 2025 and 1.4% in 2026, the outlook looks sturdier. Although it's not a massive surge, it's a positive direction. It's good news for those looking for dependable and resilient debt options, especially when global uncertainty is running high.
Indeed, Janine. Institutional investors have kept their faith in Canadian provincial bonds, with spreads still hovering close to historic lows. This stability reinforces why provinces have become a cornerstone for those seeking solid, reliable gains amid rate uncertainty. The focus now will be on whether the Bank of Canada's cautious hold will shift to actual rate cuts, which could give bond prices another boost before year's end.
It's a defensive balance as growth recovers, Steve. Provincial governments seem to be in better shape than many predicted earlier this year, with less budget risk and greater stability. This strengthens Canada's reputation as one of the world's most secure bond markets, providing a safe haven for global investors.
Well, that's a wrap for today's episode. Thanks for tuning in to another episode of the Ontario Mortgage and Real Estate Insights podcast. We hope you found today's insights valuable as you navigate the world of mortgages and real estate.
Before you go, a quick reminder, Real Approved is here to make your mortgage journey smoother. Whether you're buying your first home or refinancing, their experienced team is ready to guide you with personalized support every step of the way. Visit realapproved.ca to get started and take the next step toward achieving your home ownership goals. Catch you next time and stay informed with the latest industry insights.